Today we'll be going over a 4-part tax question. It is explained that the tax is calculated by subtracting your earned amount by the bottom of your tax bracket and then multiplying that result by a given tax rate. An additional quantity will be added, found from the tax rate below. We're told that Bill makes $28,950 a year, and we're told to work out his tax. This value will be found in the second tax bracket as marked above. The amount of tax he will therefore have to pay can be calculated by adding 895 to 15% of 28,950 subtracted by 8,950. This is equal to 3,895. In question 2, we're told that Corey makes $2,500 a month, and we're asked to find out how much money she must save each month in order to pay off her tax. 2,500 multiplied by 12 equals 30,000. That would mean that she is in this bracket here. Time is of the essence in the UCAT, so instead of multiplying 2,500 by 12, I multiplied it by 10 and 2 and added those two together. These calculations are much more easy. Now we just do the same method we did in the first question to work out how much tax she gets overall in a year. Dividing this by 12 gives us how much she has to save each month in order to pay this off. We get a value of 337.7. Rounded to the nearest dollar, this gets us $338. Omar has an annual income of $36,250. This might be confusing to some students as this value lies on the barrier of the two annual taxable income brackets. But you will get the same value regardless of which bracket you will use, and it's easier to use the upper bracket, as the amount that would have to be paid as tax would be equal to $4,990 plus 25% of $36,250 subtracted $36,250, i.e. $4,990 plus 0. And using the lower bracket you would get the same value, but this method takes a lot longer. Now to work out the percentage, you divide the tax by the annual income and multiply that by 100. We get 4,990 divided by 36,250 multiplied 100. And to the nearest tenth, that gives us 13.8%. For the final question, we're told that each tax bracket has been increased by 10%, and then we're told to find out how much more or less money someone making $36,250 will make. Someone's net income is equal to their annual taxable income subtracted by their tax. As the annual income is constant and it is the tax that is changing, the tax value is all we care about. Recalling from the previous question, the amount of tax someone making $36,250 a year would take is $4,990. Under the new rules, the annual taxable income bracket, as well as the total tax paid at the top of the taxable income bracket, will increase by 10%. So let's make these calculations. Using these new numbers, we can now calculate the amount of tax owed under this new system. This is equal to $4,945.25. The difference between the old tax and the new tax is our answer. This gives us $44.75. To the nearest dollar, this is 45. As this value is positive, there has been a net increase.